What if I tell you that there's a company that has posted around 2000 crore of revenue in FY23 but has posted a loss of 1175 crore? In fact, company has consistently posted loss in last 4 years with ROE of minus 56.7%. Would you like to invest in such a company? Obviously, by just looking at the data, the first reaction is it's a suicide to invest in such company, isn't it? But I've been closely tracking this company for the last 4 quarters before I built my conviction that it could be a potential turnaround story. Can you guess the name of the company? Well, it's SW Solar, that is Sterling and Wilson Renewable Energy. Company got listed in 2019 at 780 rupee, and over the next 1 year its share price tanked 90% and company was on the verge of bankruptcy. However, its share price is now back to levels of 680. Now, before you make a perception about the company just by looking at its weak financial profile, I want to share the journey of this company that has a history of nearly 100 years and why it could be a big turnaround story for FY25 and beyond. But before we begin, a disclaimer that this is not a sponsored video. I don't do any paid stock analysis. If you are following my channel, you would know this. And please watch this video till the end to understand the reason behind potential turnaround. And please do your further research before investing your own money. Because there have been cases in the past where many companies have shown turnaround potential but have failed. However, if the turnaround is successful, these companies could become huge wealth creators. One of the great examples is Eicher Motor, where management was planning to shut down its loss-making arm of Royal Enfield bikes in early 2000. However, it got turned around and generated nearly 4,000 times return in the last 25 years. So it's very important to understand what caused the problem for the company and what resulted in the turnaround. Usually it's the change in management or the business model. And in this video, we'll exactly try to understand this potential turnaround story of SW Renewables. Alright, let's get started. So it all started in 1927 when Shapurji Mistry, a prominent industrialist, made a deal with Merwan Daruwala of Wilson Electric Work. So Sterling came from Mr. Mistry's investment firm and Wilson from Wilson Electric Work to form Sterling and Wilson. It was basically an electrical contractor firm that worked on iconic projects like Taj Mahal Mumbai, then Reserve Bank of India building, World Trade Center at Cuf Parade Mumbai, and so on. Eventually, by 80s, Sterling and Wilson became the largest MEP and EPC player in the subcontinent. So MEP stands for Mechanical, Electrical and Plumbing Service, and EPC stands for Engineering, Procurement and Construction. In 2019, Sterling and Wilson got demerged and listed its solar EPC business with name Sterling and Wilson Renewable Energy. Now let's first understand the current business of the company. So basically, SW Solar is involved in the business of setting up large-scale renewable energy parks that include mainly solar, wind and battery energy storage system. Now it's important to understand the various business models within EPC domain. So first model is third-party EPC for turnkey projects, where EPC company provide full EPC services including procurement of raw material, engineering and construction. Operation and maintenance is typically performed by the EPC company for at least 2 years. In second business model, there is partial procurement where the client decides to source modules and other components directly. And EPC company provides engineering and construction and partial procurement. Operation and maintenance is typically performed by the EPC company for at least 2 years. Third model is where EPC company is also the developer that develops the project and sells project right to asset owner prior to construction. Operation and maintenance is retained by EPC company. And in fourth model, the developer of the project itself performs the EPC work along with operations and maintenance and asset ownership. I hope you got a fair idea of EPC business model. Just to give you an idea, today the largest EPC company in the world is L&T. In short, the work of SW Solar is to build solar plants and charge a fee which is one time in nature. And it may also operate and maintain the solar plant for yearly fee, which is a recurring revenue stream. Now this slide shows the journey of SW Solar till 2019. In 2011, it ventured into solar EPC business, and by 2015, it was India's largest solar EPC company. In 2017, it demerged its solar EPC business to focus on opportunities in solar business. By 2018, it emerged as world's largest solar EPC player with presence in India, Middle East, Africa, Southeast Asia, Europe, US, Australia, and its global market share jumped from 0.3% in 2014 to 4.6% by 2018. In short, SW Solar was growing leaps and bounds. This chart shows the exponential rise in company's annual turnover between 2015 till 2019. Since there was exponential rise in demand for solar projects, SW Solar was on high growth trajectory. However, company's downfall started right after the IPO, mainly due to COVID. This chart shows the fall in revenue over the next 4 years. The question is, what went wrong? So first biggest challenge for the company was its contract with its client. Basically during 2015 to 19 period, Indian solar projects did not pick up, so SW Solar was increasingly bidding for global contracts in Middle East, Africa and so on. This pie chart shows the FY19 order book where India had only 17.3% stake. Majority of company's order book was from international business. Now the challenge with the business model was that the contracts Sterling and Wilson was signing included everything, right from procurement of solar module to engineering and construction and operation and maintenance, and the contract price was fixed. This meant that if there were any cost overruns due to delay in construction or increase in price of raw material, the company had to bear all of them from its own pocket, and company was already operating on single digit margins. This is actually the biggest risk with EPC companies. The project costs are very high and many companies are already growing their business by taking debt. So any increase in project cost can result in sharp fall in profitability, and high debt can kill the business. In case of SW Solar, they did not anticipate increase in cost because during that time, solar module prices were falling due to giant capacity addition by China and technology improvement. And company had a reputation to finish the projects before time. So they worked on fixed contract basis that was actually beneficial for the company. And then in 2020, COVID hit the world. It resulted in labor shortage and sharp delay in project completion. On top of this, solar module prices went up significantly. As a result, company's cost went up sharply. Company had to cancel the contract due to this unforeseeable circumstances. Now SW Solar was right on their side, but their client said that they should have planned contingencies and should have done better risk management. So SW Solar clients did not make the payment for unfinished sites and sued SW Solar in the court. As a result, company started defaulting on loan payment, and that further resulted in credit derating. It further increased the cost of the borrowing. Even SW Solar sued its client for non-payments, and that was the key trigger for sharp fall in revenues. Then what resulted in improvement in situation? So in 2022, Reliance Industries subsidiary Reliance New Energy acquired 40% stake in the company for 375 rupee per share. This was the first sign of revival in company's business. By that time, the litigation cases were increasingly coming to their closure, with SW Solar winning most of them. Now something very interesting happened during this phase. Companies started focusing on the domestic Indian solar market that started growing exponentially. Moreover, in domestic contracts, the solar module procurement was mainly the responsibility of clients rather than the EPC company. So after Reliance backing and focus on domestic market, company's order book again started growing. In 2022, company received one of the largest domestic EPC contract of 1.6 gigawatt by NTPC. In 2023, it achieved a second consecutive mega order of 1.5 gigawatt from NTPC. Company also got the loan from financial institution. As a result, its business started improving. Fast forward today, as of March 24, company has an unexecutable order book of around 8,000 crore. This order book was around 4,900 crore in last year, March 23. So order book has grown around 60%. Out of this, around 85% order are from domestic Indian market. Mind you, in 2019, Indian order book was just around 17%. As of FY24, company's revenues are around 3,000 crore. So its order book is more than 2.5 times its current revenue, and it's growing exponentially. And management has given a guidance that FY25 order book would be higher than FY24. This gives a good picture on company's top line growth in the near term. As far as debt is concerned, company's FY23 debt was 1,966 crore. That is now reduced to just 116 crore. As a result, company's interest component that was significantly eating the profit has fallen significantly. The question is, why am I covering this company now? It's because I was closely tracking this company and it was recovering from the challenges but was still not profitable at profit before tax level. It was consistently posting losses due to negative operating profits and high interest. However, in Q4 of FY24, that is the latest result, company has posted positive EBITDA and fall in interest that has resulted in first quarter of profits for the company after many years. As a result, right after Q4 numbers, last week, company share price has jumped around 20% even before I could share this video with you all. Having said this, company share price is still trading below its IPO price of 2019. And if company can continue to grow its business, its share price can significantly grow in the future. Currently, company commands a market cap of around 16,000 crore and has got price to sale of 5.26. Now, we can't look at PE ratio or EV to EBITDA due to losses in the past. Just to give you an idea, another very prominent player in solar EPC space is Vari Renewable, which is trading at a price to sale of 43. On conservative side, management has given a growth guidance of around 15 to 20% CAGR rate, and this is excluding the orders from Nigeria and Reliance. So please note that out of 8,000 crore of its order book, it does not include your Nigeria and Reliance order. So recently, company has been awarded order worth $2.2 billion from Nigeria, which is not yet signed. Once that is signed, it would significantly boost company's order book, although it would be one time. So here, please note that EPC business is very lumpy in nature, which is again a key risk. Today, everything is looking great due to high demand for solar EPC projects, but this growth might fluctuate based on order book. There is also a significant order expected from Reliance industry. So I hope you got a fair idea of opportunity and the turnaround story. One thing I forgot to mention is in December 23 quarter, the company raised around 1500 crore via QIP, where Reliance diluted its stake at around 365 rupee, and mind you, today's share is trading at around 680 rupee. Company got a very good response that included FIs like Goldman Sachs that has further increased allocation in the company. They included Nippon and Aditya Birla AMC that again boost retail investors' confidence. So in this video, we discussed the rise and fall of SW Solar, and now again company is trying to rise from the ashes. Like I said, this is a high risk, high reward bet. There is certainly a lot of opportunity, but it comes at a risk. Some of the key risks include delay in project execution and slowdown in order book growth. But if things work well, SW Solar can be a huge wealth creator. Recently, I got a chance to look at research report by Nuvama, and it has given a buy call on the company with a target price of 850 rupee. So in spite of 20% jump in share price last week, there's a very good wealth creation potential provided company execute the projects as per plan. I hope you would appreciate this research. It took me a lot of time to collate the information and present in just 10-15 minutes. For more such informative content on stock market and personal finance in general, you can consider following this channel. And do share this video within your circle. If you want to join my close community, you can explore my weekly video series where I share stocks where I am investing my money, and along with tracking more than 200 quarter results. So basically, I share one exclusive video every week. You can get the detail in the pinned comment. Now tell me in the comments, what do you think about the potential in SW Solar? Is it worth taking a bet? I'll see you next video. Till then, take care.